Let's bring you some analysis on what has been going on in Africa's largest economy now. Segun is a principal partner at Woodridge and Scott Consulting, joining us now from Lagos, Nigeria. Segun, thank you for your time this evening. So the phrase we often hear in the tech world is move fast and break things. And it certainly appears like Bola Tinubu has been doing that ever since he got into office. So in 30 seconds, what's your impression of what he's done so far?
Well, thanks for having me. Look, for observers of the Nigerian economy and Nigerian politics in the last 24 years, a lot of what the president is doing won't really come as a surprise. And this is because he has shown himself to be a market-oriented, free market economist type of leader, you know, in his previous public office roles. Right, so it's not surprising that he's liberalizing markets, he's taking subsidies away. There are some arguments, though, that he might be moving too quickly, especially in those areas that affect the social, that have a social impact on the country. You know, of course, we all know how notorious Nigeria is when it comes to the poverty issue. 133 million Nigerians living in multidimensional poverty. So taking away cushions that have been provided by the government to subsidize, if you like, the cost of living for Nigerians so quickly, without any remedies and without any measures to cushion the impact, may be seen as being too harsh and too quick. But the markets are responding well, and it looks as if investors do like a lot of these measures.
Right. So let's turn to the oil sector, because one of the things that has been mentioned here is that, you know, NNPC is essentially either coming to market in one way or another. Either they're going to be sales of assets, or there's going to be an IPO. Assuming NNPC is ready for an IPO, maybe by the middle of the year, what sort of cash could it potentially raise?
I mean, the NNPC has a share capital of 200 billion naira. Of course, one of the problems that we have with the NNPC in the country is there isn't adequate public information about its operations. So the 200 billion naira, we will find out in the valuation of the company, if it's coming to the public, to the stock exchange in an IPO, what price those shares will be sold off for. But if you benchmark, you know, the NNPC financials against similar operators in that sector, you have other companies like Total trading at 338 naira as of today. You know, so you would expect that the NNPC, with the size of its operations being the largest oil and gas company in Nigeria, you would expect that the share price, the price per share, you know, that it will come into the market at, will probably somewhere be somewhere in that region. So even if you assume that the NNPC comes at a very heavy discount of, say, 100 naira per share, and the government sells off, say, 80% of its stake in that corporation, you're talking several trillions of naira, or between maybe 200 to 300 billion dollars that the government will be able to raise from that sale. So this is also a move that would be expected to be received positively by the investing public and by, you know, foreign portfolio investors as well. And obviously, this would also have a deepening effect on the, you know, the Nigerian Stock Exchange. This is a move and a measure that a lot of market observers have been calling for over the years. The size of our stock market compared to the size of the GDP is simply too small, and the introduction of, you know, a large corporation like the NNPC would help deepen the market.
Right, and one of the things that has come out as well from the Policy Advisory Council is that their argument is that the federal government needs to sell down the stakes that it has in joint ventures, JVs with oil firms, in order to avoid cash calls that it hasn't been able to actually meet in the past. But walk us through the policy trade-offs there.
Well, the cash calls have always been a problem for the NNPC and has provided a significant strain on the cash flows of the NNPC. And, you know, given the dependence of the Nigerian economy and the government finances on funds that are received from the NNPC, so by extension, the cash calls have also provided a significant strain on public finance in Nigeria. only recently, the NNPC has just been able to mop up some years of arrears in these cash call obligations. Walking away from that would appear to be good because it will free up the desperately needed cash for the government to invest in different social services. However, it's important to note that the NNPC, being up until now at least a government-owned organization, represents a national interest of the country in that sector. And given the strategic importance of that sector, I think there are concerns surrounding the wisdom in allowing complete private enterprise to take full control of the production activities in that sector, of all of the investing activities. That may very well leave Nigeria at the mercies of international operators, and some would argue that this may not be a good move from a national interest and from a national security point of view. But from a market point of view, the impact can only be positive. The caveat to that obviously would be that people would expect, and market watchers would expect to see some transparency in the method that all of these divestments would happen. And if that happens, then the market will react positively.
One last question for you, going back to something she mentioned when we started the conversation. The council has also advised that the government should essentially move towards full deregulation of fuel prices, with a caveat, however, of spending roughly $8 billion in direct cash transfers for the poorest households. But going back to the original problem, right, if the country can't afford fuel subsidies of about $10 billion a year, where will the money to fund these cash transfers come from?
This is a question that the labor unions and members of society that are opposed to this move have been asking the government, and I'm afraid there hasn't been any very clear answers. If we are removing subsidies because the government can't afford to pay for those subsidies, and if we're removing subsidies because we want to free up the finances to invest in other sectors of the economy, education, healthcare, electricity, and all of that, then where will the $8 billion come from to pay these cash calls and provide these palliatives? The answers might be that freeing up the subsidies, taking out the subsidies, may enable the government to invest that desperately needed cash, create an environment where there is more value is generated and the government can then generate more cash. But it just seems far-fetched. So there's a lot of answers that are required. The second part of the argument against this is, look, $8 billion might sound like a lot of money, but compared to the size of this country, the size of the population of Nigerians that will be affected negatively by this policy, 8 billion naira really doesn't do much. In terms of conditional cash transfers to, let's say, 50 million as announced by the government, 50 million Nigerians, this would amount to about 5,000 to 7,000 naira for over a 10-month period. It's barely enough for just one meal in a day. So there are questions that the government and the Presidential Advisory Council still needs to answer with regards to this. And I think that there's a lot more thinking and planning to be done to ensure that the impact of the subsidy removal doesn't create more problems than provide solutions.
All right, we'll leave it there for the time being. Thank you for the update there.